Hello, everyone. It's been a minute, but I am here with a market review. Today is Sunday. It's early Sunday morning, so I want to get this out the way before I can start my busy day. It's early Sunday morning. Day is May the 5th, 2024, and I want to start off with something, just a definition of what a bearish reversal candlestick pattern looks like. And this is according to Investopedia. Bearish reversal is a hanging man. Hanging man is a bearish reversal candlestick pattern that occurs after a price advance. The advance can be small or large, but should be composed of at least a few price bars moving higher overall. So moving a big jump above a couple price bars before the jump, pretty much in a nutshell. The candle must have a smaller real body, so a small real body with a long lower shadow that is at least twice the size as the real body. So I wanted to point that out. I wanted to put that out there before we dug into this review because there was a lot of gap ups that mimic a possible bearish reversal that could be we could be in store for next week. So I'm gonna start out by looking at the NASDAQ. So here's the NASDAQ. This is the daily chart of the NASDAQ. And on here I have my Fibonacci tool, which I already drew about 2 weeks ago, as to what we can possibly see with overall levels that we can possibly target for overall price movement moving forward with the major averages. I have a trend line that I already drew in here. This white dash line is a trend line, which is going to represent a area of support and resistance. And then I have my yellow line here, which is my 20 per moving average. And then I have my purple line, which is my 50-day. All these are simple moving averages. Now, let's start off with, first of all, showing you guys what I believe to be a bearish reversal pattern after noticing on almost every indice this type of candle that's popped up, candlestick pattern that's popped up that should be notable. So here is a gap up in price action moving above all of this last week on the daily chart. That's something to be mindful of. Are we in a runaway new bull move higher? I don't think so. I think we are at a possible reversal pattern that we can start to see unfold next week. This is a long, this is a hanging man type candlestick pattern right here. You got a small body, upper body of a candlestick with a long stem. And this is a gap up, folks. Look at a gap up in between price action from previous price action. Big gap up. And where did it gap up to? Right at an area that it used previously as an area of support. So previous support areas normally becomes levels of resistance. So we are right back at that level now. So is it going to treat it as a level of resistance? I do believe so. All the signs point to it. We got this gap up with this hanging man type candlestick. A big gap up right here. Normally, after we see gaps, a lot of times, especially a big gap up like that, normally after you see a big gap, 9 times out of 10, after you see that big gap, eventually price action reverses in an attempt to fill this gap. So let's see if that's what happens next week. That's what I believe that we could be in store for next week. So walk carefully. That is a look at the NASDAQ. So let's look at the NASDAQ. Moving right along. Let's take a look at our Dow Jones Industrial Average. And what do you know? Same type of pattern. I'm going to point out a couple things here. There's lots going on. We're still in a even though we got that big move up last week, the markets overall, the bears are just sitting back waiting. We had this bearish crossover with the 20 per moving average crossing below the 50 per moving average around the middle of April. And if you look at what happened with that, it was acting as a level of resistance until price gapped up above it, only to go where? Right back to the 50 per moving average this hanging man candlestick went to, and right at a role reversal point. Role reversal points are normally when you see a area of resistance or area of support is broken after an attempt to go higher, or at least attempts to go higher. So area of support, it was then broken. Okay. So we had a role reversal from a pretty much from attempting to be a bullish standoff, trying to go higher, and then we dropped below that level. So now we got a role reversal. We got a straight up bearish trend here. Price action went back up. So this level here is going to be the role reversal level. Anything that attempts to breach this level is probably going to be tested first. So I think we're at a test with this hanging man candle, and I think we're going to see how that plans out next week. But again, same type of pattern that we just seen, that I just showed you in the previous NASDAQ component. Gap up, big gap up here with the hanging man candlestick. Hanging man candle, right up to a role reversal point, a level of area that the price action has tested before. It used to be support. Oh, sorry, when we tested it, used to be support. Previous support becomes resistance, right back above it, but not by much with the hanging man candle. So that leads me to believe that this gap was probably going to be filled eventually, and probably happen sometime next week. So we could be in store for a reversal, bearish reversal pattern, bearish reversal sometime next week. That's a look at the daily chart of the Dow Jones. Let's take a look at the S&P 500. Here's S&P 500. And we see some of the same similar patterns. We have the 20 per moving average crossing below the 50 per moving average about 2 weeks ago. That's a bearish signal for the overall for markets overall. Until we see this 20 per moving average turning back up, then any moves that we see going up towards the 50-day moving average is probably going to be met with resistance. Okay, previous area support is now acting as resistance. We have a hanging man candlestick that's also a bearish signal. So that's 1, 2, the gap up, and the candlestick. We got about 4. We got about 5, at least 5 bearish pattern signals, which leads me to believe that price action is going to come back down to at least fill that gap. And we could go much further because we look at the Fibonacci retracement tool down here. When I first drew it, we got a nice bounce from that Fibonacci retracement level. So could we possibly be in store for a test of that level? That is a possibility. We could blow right through these levels here and come back down to test that level. So next week, I think it's going to be interesting and possibly a return back to the bearish downturn. That's a possibility. So be mindful. Be very mindful of trying to trace this bull, which is really not a bull. It's in disguise. A bull in disguise. It's pretty much a bear that has a bull cape for now. But I think it's going to be revealed next week. All right, so we took a look at the NASDAQ, the S&P. I think we already did the Dow Jones, if I'm not mistaken. Yeah, we did the Dow Jones already as well. See the Dow, same scenario. So let's take a look at the IWM. Or should I say, let's look at the Russell, RUT. Let's look at the Russell itself. And what do you know? Same pattern. Last week was a nice move for the bulls, but it was pretty much it was recovering. from this downtrend that it experienced. So it got, downtrend got a little old sold, so we had to find a way to rally, and that's what it did. Price action rally. This candlestick is not the same as others. However, we are still at a role reversal point, which leads me to believe that we're still going to see some pressure in the overall markets next week. So back at a level of resistance, because this used to be support until it reversed, and now this support now becomes resistance. So we're right at level of resistance, right at the 50-period moving average, which is also a signal that we could be at a strong point that the market could reverse, right at that level of resistance, right at the 50-day moving average. Could not advance much higher than that. And we got a gap up here. So all roads point to a bearish reversal unfolding next week. So be very, very careful for all you bulls out there. All right, let's take a look at the SPXA 200R, which is also a tool that I like to track. The overall. I like to use to track the overall sentiment of the market. And in general, the overall sentiment of the market, even though we had that bullish run last week, is still overall bearish. Overall sentiment is still bearish, folks. And I want to show you what this tool is showing us. Again, there's a crossover of the 20-period moving average crossing below the 50-day moving average. And as you can see, even with all this price action below the 50-period moving average showing a move up towards it, the 20-period moving average is not curling up. It's continuing to go down. That's bearish. We have all of this price action congested here. We got this gap up here of this tool. Again, for those folks who don't know what this tool is, this is the tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average. And normally what you see here, it normally reciprocates in the overall price action. So when you see less and less stocks trading above their 200-day moving average, you'll start to see it transcend within the price action movement of the actual overall market. So this percentage tool gapped up to 71%. But only to a level of resistance again, just this white dash trend line, only to be muted right below the 50-day moving average and to be negated by its 20-day moving average, right at the 20-day moving average. This leads me to believe this is also going to reverse back lower. So next week, folks, I do believe that we're going to start to see, unlike what we saw this week, we're going to probably start to see the opposite. You see those big moves up, big gap ups, you probably start to see some of those moves in the opposite way. Maybe might see some big gaps down in the overall market on next week. By the end of next week, I think we could probably be overall down and take out the highs that we saw last week. That is a huge possibility, folks. Want to look at gold, silver, and copper real quick before I end this broadcast. Let's take a look at gold first. Let's see where gold is. I didn't have a chance to look at that this week. So gold is at an interesting place. It's been in a downtrend since we made it up to that 24.48 level. You see, we've been starting to trend downward. Could we be at a reversal pattern in gold? In other words, a bullish reversal? Could we be at a bull reversal pattern? That's a possibility. We have to wait and see how that pans out next week. But gold almost made it back down to this 20. It almost made it back down to this Fibonacci retracement level. Didn't quite make it down there, but looks like we're starting to stall here. Could this be a bear flag? We have to wait and see. Or could this be consolidation for a move higher? That is still yet to be unfolded. Look at the TTM squeeze. The bars are still trending lower. So we could be going a little bit lower in gold, or we could be about to reverse. It's hard to really say. We have to wait and see what happens next week. But if you look at let's take a look at the 4-hour chart real quick and see if it's showing oversold. Yeah. So it wasn't oversold area on the 4-hour chart, but we're not there anymore. But we're trading below the 50-day and the 20 per moving average on the 4-hour chart. But could we be at a point of exhaustion here to the downside? That is a possibility, because if you see that level appears to be a level of support, and it's long wick with a strong upper body after a move up lower. That could be a reversal pattern. It's a little bit different. It could be a reversal pattern to go higher. So we have to wait and see how that pans out on next week. Staying right here, let's take a switch over, look at silver. Here's a 4-hour chart of silver. I'm going to switch this back to a daily chart. Again, could we be could we be oversold here? We possibly could be an oversold state on this daily chart. Price action is hovering right around this Fibonacci retracement level. So could we be ready to reverse and go back higher? That's a possibility. We have to wait and see how that pans, how that looks next week. And one more we'll take a look at is copper. Here's copper. Copper also has been held up by its 20 per moving average. Could this be time for a reversal to go higher? We have to wait and see. That is a possibility that we could be ready to see copper reverse and go higher. Look at a copper 4-hour chart. Here we go. Here, it looks like it really wants to reverse and go higher. So pretty much bullish on these commodities, bearish on the overall market for next week. That's my overall stance. Take a look at one more thing, which is the VIX, because the VIX found a way to sell off. And what do you know? The VIX is just the opposite, folks. Even though, and this is a 4-hour chart, we got this crossover pattern here with the 20 crossing below the 50 day. But overall, I think this could reverse real quick because we got a gap down unlike the overall market saying a gap up. VIX has a gap down in the VIX. 9 times out of 10, when you see a gap down in the, you see a gap in the VIX, that gap normally closes itself. And a lot of times the VIX, it's hard to tell when it will close, but with the way the overall market is looking, I think the VIX is ready to reverse and go higher and possibly close this gap on this 4-hour chart. Let's glance at the daily chart real quick on the VIX. Look at that. Big strong down move on last week on Friday. Could we go a little bit lower? We could go a little bit lower because it's not completely oversold. Look at the RSI. We could go a tad lower, and that could happen possibly Monday, maybe Tuesday. But if it does happen Monday, we could get a quick move to test all the way back down to test this level here and get an immediate bounce. So we could open higher on Monday. That's a possibility at this VIX. But I think that would be negated real quick. We could see a move bounce, or we could just bounce up from here, gap up from here, and continue to go higher. So I think overall, again, I think overall the VIX is pretty much in oversold territory, and we could see overall VIX reverse, and we could see the market reverse as well next week in the opposite direction. So that is my story for this weekend. Hopefully, this is some news you guys can use. And hopefully I may be with you guys on next weekend, and maybe even sometime during the week if I see anything that really stands out that could be something to pay close attention to. All right, folks, I'll catch you guys on the next video.